Hello, everyone. So let's start with our market analysis that we've been doing for the past few days. Bitcoin has been in this weird range, right? These past 7 days, it hasn't been doing anything at all, just stuck in this price. Every time it goes up, it goes down. Every time it goes down, then it goes up. See, there's a lot of indecision in the market. That's what this shows me. This is to me based on general sentiment around political environment, the tariffs that keep consistently being announced. There's a lot of um, yeah, I don't want to say indecision is not that the word. There's a lot of uncertainty, exactly. Uncertainty around the future, and so when that happens, the market doesn't like it and doesn't move as much. So uh, I won't try to pretend that I'm a macro speculator, right? So I don't know how these things affect. I just know what price we have today, and price hasn't been moving for the past 7 days. So hasn't my portfolio. I continue allocated to home. Let me change to a weekly chart. I continue allocated to home, to DEXA. DEXA probably going to be closed sometime soon. It's moving towards my trail, and I continue my allocation to Hyperliquid, right? Um, and yeah, most of the market has been stuck in this weird range. Let's look at the altcoins uh, market orders. Let me add here others to the watch list. So in terms of the total market cap excluding BTC and ETH, we can see that it's pretty much in a range, right? Uh, like Bitcoin, when Bitcoin isn't doing much, crypto in general isn't also. Um, so there's expected. If we look at others, every other market cap, every other coin, cryptocurrency that is not in the top 10 by market cap gets added to this list, and we are still below these Q1 2024 highs, right? So there's not much there. Market has been very quiet, and there hasn't been much to do. And you can be forcing trades if you are doing directional plays like I am. I'm trading momentum and trend in crypto. If you are doing that, if there's no action in the market, there's no trades to be had. So forcing them is just trading randomly, and that's not good in general. Um, yeah, let's go through the top runners for today and see if we have something to mark out. This complete BNX has been on a run for the past few days. There is, at least for the style that I trade, there is no entries on this chart. I trade the weekly trends breakouts, so definitely there's no not a at least not the breakout that I want to take. EDEX, ME, layer, SU. Sorry, a good point on BNX. You can plot this data, but um, I did a study in the past. I actually have to redo it. That when a coin moves like this, just up, just green candles, right? And increase. Just green candles, no red candle for a bunch of weeks, 1 to 2 weeks, and it moves more than 200%. Even though the percentage I don't like to look at it as an absolute, it really depends on the volatility of the asset, but let's keep it at the extreme 200% because, yeah, let's keep it at 200%. Uh, in general, the the value, the expected value of your bet, of your position decays because if something is up 200% in a few days, and if these people have been losing money all this time, right, from 2024, probably from summer 2024, some of them will take profit. Let's make the assumption that from a behavior standpoint, some of them will start taking profit, right? Let's say that you have a position here and you suddenly see your position is up at break even, or you have a massive profit during these days. What is the natural behavior that people will look for? People will start wanting to take profits, and that that shifts the dynamic of your position to a position that you are playing with strength to start playing with weakness. Also, you have to analyze and think about the position of the other side. Okay, buying here and buying here is all fine. There's more expected value to continue, right? If that's your sort of play and you analyzed it, but buying doesn't isn't infinite, right? So buyers start to lose interest up here, and the higher it goes, the less buyers are willing to pay that price for an asset. So if something is up 200% in a day, why should I be buying it at 200%? Why am I paying two times the price that I could have paid a few days ago, right? It really needs to be something uh, it really would need to be something that I know that has expected value for me to take a position on. So all you get left on these plays are like the gamblers up here, right? So and once the supply starts to hit the market and once these holders start selling or covering some of their positions, yeah, you will pay whoever bought up here will pay a price, right? So it's all about behavior in markets. At the end of the day, it's still people trading these markets, and you have to consider that people behave uh, equally across markets. And when something is overbought, extremely overbought, it's natural to expect some volatility and some selling coming into the market soon. At least that's my view of markets. And you can plot that data on your own. Just take all the assets that increased by a certain standard deviation, or to make it simpler, you can just start by plotting every asset that has gone up without a red day or a red week and plot it to 200% or something like that and see the behavior or the expected value of continue to be long after that. It really goes down, and that's important because there's mean reversion effects in the market, right? Things don't just go up infinitely and in a short span of time. Sure, let's look at SPY, right? SPY is up 70% in the last 2 years, right? Not 2 years, but well, okay, 2 years, 2 years and a bit, right? So you could say, oh, SPY 70% up, it must go down. No, no, mean reversion doesn't work like that. When you it needs to be expensive, um, both in price, right? In price and in time. So you want something that goes up a lot and in a few days and without any like dips or anything like that. That's where mean reversion properties start to come into play, and that's what I mean on BNX, right? Something that goes up 100% in a few years, in years, doesn't mean that is extended, right? It's just a trend. It's a natural trend of markets. But something that is up, what, like 400% in 2 weeks, that's extreme. So even XRP, right? Even XRP went up, what? When it got the news that the SEC wasn't going after them anymore, or that the case got suspended or whatever, it went up like 400, 500%, even on those massive news, and still stopped, right? It didn't retrace completely because there's a lot of community and bullishness in this asset. So that there was buying pressure that held this coin. But in general, you don't want to be buying extreme amounts of strength, right? Um, because that's where events like this, like in 2021, this was crazy. BNB was up, look, how much? 600% in a few days. If you keep buying up and up and up, you're going to get hit with a decent drawdown. And if you buy stuff that when you're leveraged, even worse. So consider, even though crypto can get pretty crazy, always consider the expected value of your positions, right? And you want the most expected value. Otherwise, you are taking positions that you don't expect to gain anything on them over the long term. Yes, you might earn some money today, you might make some money today, but the expected value, the long-term expected value of your position is negative. And if you want to make this a sustainable business, you want to be taking positions every day and decisions that are positive in expected value. And that concept around expected value is very important. Most people don't realize that. They think that every position is a gamble. It's like, oh, I know what's going to happen to this stock. No, no, that's not how you should play. You should always trade with some positive expectancy of your decision. It's like going to buy a new car. You already know the expected value of that decision is negative, right? When you exit um, when you exit that garage, your car is already down what, like 30%. So you already know that buying a new car is a negative expected value decision at least in terms of pricing. I'm not saying about quality or safety or whatever. In terms of price of value of your asset, it's a negative value decision. You're going to spend that money, and if you keep buying new cars with all your money and driving them, you're going to lose like 20-30% every time, right? So eventually you are left out of money because that's a bad investment decision. But let's say that you actually buying a new car, let's make the world that you would that the car would increase 30% in value, let's say. Then that would be a positive decision, and you would want to squeeze as much as possible from that decision. So you would want to buy as many new cars as possible. And that's what happens when you trade with expectant a positive expectancy. Maybe you have 1% or whatever on average, and you want to trade as much as possible of that decision. That's basically the idea behind expected value. So I don't see anything today. Like I said, the market is pretty quiet. We already have our levels here, and this is it. Is most of trading and investing is just waiting, just just standing there waiting for your time, right? And there's no trades every day. Even SPY is looking really good up here, right? Like on this breakout here, looking really good there. Anyways, as I was saying, trading is mostly about waiting. It's not about making decisions every day. It's about waiting. You can make up any story, any narrative for your trades, but at the end of the day, if you are taking positions that are not based on some expectancy of value, you are making bad decisions, and you shouldn't. So this is it. Trading, good trading, systematic trading is boring. It's coming to the market, doing the same thing every day, and maybe at the end of the quarter, maybe at the end of the year, you made money, great, and you move on. Thank you.